Thank you very much indeed for joining us, Alan. Very, very difficult times indeed for FirstRand and the banking industry in general at the moment. How are you going to survive it?
Yeah, thank you very much. I guess it's less about survivability. It's more about working our way through this. So, what you are seeing in the banking sector, and you saw it play out strongly in FirstRand's results, is the impact of the proactive provisioning that we have to do, and that's all in line with this new accounting standard. So the question for us now is, having raised the provisions, that obviously had a big impact on our earnings, how much of these provisions actually are we going to need, and how much of these provisions can we write back? So that's really the issue for us. We've got the capital, we've raised the provisions, the banking sector has got the capital, and so it's really now all about focusing on collections, making sure we can manage those customers through this difficult period, and then hopefully we can write a lot of these provisions back. I mean, that's really the objective of where we are.
What kind of demand are you seeing for that capital? I mean, so many people were cancelling projects in the heart of this COVID-19. It makes you wonder how long it's going to take them to come back to the party, as it were.
Yeah, I mean, I guess this is all about recovery of the economy. A lot has been said about the economy. I think the fiscal position is well understood. But equally, there is a plan that has an upside and a recovery, and so we do think it's going to translate. But I think importantly is you're going to need capital for that period. So there are going to be a lot of opportunities. We're going to look out for those opportunities. But I think just general balance sheet growth. Businesses will come back. They will reflate. The demand for our products and services and debt, I think, will increase, and you need capital for that. So that's really where we are. I mean, I have to say, one of the things we've got in this country is a well capitalized banking sector. Of course, we've got a great regulatory environment. It's not something we take for granted. So I think that meant that the banks went into this difficult patch, I think, in pretty good shape. And so, thankfully, we haven't seen, some of the real horror stories that we could have seen, if we had gone into this pandemic in a weakened state. So the banks, I think, are going to be able to get through this. We need to make sure our retail customers and our business customers can get through this difficult patch. We're going to have to manage the unemployment that's probably going to come at us. We are expecting to see a tick up in that. And while interest rates, I think, are low and may even go a little bit lower, we sort of forecast a difficult 12 months, I think, ahead. And then I think we can start articulating a growth story. That should be,
Sure.
The health crisis is behind us. We've probably got 12 months now, I think, of hard yards to do on the economic side.
And no final dividend, I see. Obviously, following the trend that everyone's at the moment. How long do you think this is going to last in your business, you think, that there's no dividend trend?
Yeah, I mean, it's an important proposition for our investors. So, I mean, we would like to get back to dividend paying as quickly as possible. I think it's a very sort of broad response you've seen from all the OECD markets. Banks and bank regulators in those OECD markets have all pretty much put out guidance around the withholding of dividends. I think it's just been the right response. Hopefully, it's a calendar 2020 story. I don't have any deep insight on this, so I can't. It's not that I've kind of got an inside track here, but hopefully in 2021 we can see a situation where we can get back to the resumption of dividends. I think it is important. There are many of our shareholders who are dependent on that cash flow,
Sure.
and so I think it's vitally important that resumption happens, and that cash can get back into the economy. People need those dividends. So we want to make sure, and then another reason why we've got to make sure we look after capital is because when that green light comes for dividend resumption, we've got to make sure we've got the firepower to reignite dividends and get going again.
And just one last question. I mean, one of the things that concerns me, I mean, how many banks, including yourself, lent money during COVID-19 to some of these schemes put up by the Oppenheimers and heaven knows what. How worried are you when that sort of like huge wave of debt comes back, when everyone has to repay these loans that kept them going during COVID-19?
Yeah, I mean, I guess those fears are what the accounting standard and the models that you have to build and populate and try and forecast deal with. So we do expect that there is going to be further migration in some of our portfolios. So we talk about, I don't want to get technical here, but there's different stages in the portfolio, but we haven't seen all of this rush into what we call non-performing loans, which are technically bad debts. But that may well happen. And so that is a risk. I do think the next, 4 or 5 months, maybe the run into December, I think is going to give us a lot of data points. People are, going to have come out of this debt relief period. We've got sort of different cohorts. Not everybody, went into the 3-month cash flow relief, at the same time. And so some people are going to come out of that period at the end of June. And so the first month of picking up repayments would happen in July. But of course, then some people, you're only going to see that date in August and September and October. So, we do think there's some water to flow under the bridge. The other thing is that TERS scheme is going to come to an end. That cash flow relief has obviously helped lots of businesses, lots of individuals. But, that's also going to peter out. So I do think the run into December, I think, is going to be quite revealing on what's going to happen to collections, how are consumers going to manage through this debt, and hopefully we also see government make some really positive moves around some of the reforms, and that can also help boost confidence. It's something that's urgently needed in the country, just to get people feeling a little bit better. So I mean, I think we've got lots to be gloomy about. So it's not going to take a lot from government to get people feeling a little bit better, but it's important that we start.